Welcome back, everyone, to another edition of Insightful Principles. In this content, what I want to discuss is the importance of self-custody. For everyone out there that is investing in the crypto market, the main thing that you'll tend to hear is not your keys, not your coins. And I really want to highlight some of the reasons why you want to have self-custody and really go over some education of the importance of it, and also really just having a conversation around a counterparty risk that you have as an investor when you do have your public keys on a centralized exchange. I'm also going to get into just understanding the value of privacy and security when it comes to the properties of Bitcoin. Now, why is self-custody important? Well, there's many words that come to mind when I think about it. I think of privacy, I think about security, decentralization, it being borderless, permissionless, open source, verifiable, self-sovereign, and freedom. These are a lot of the terms that I think of why self-custody is so important. And as an investor, with having exposure in the crypto space, specifically when it comes to Bitcoin, self-custody is vitally important. Now, many of you may have heard, more recently here in the month of June. For some of those that may not know what happened with Celsius, I'm just going to give a quick breakdown of that situation. But it really provides the reason of why self-custody is so important. For Celsius, earlier this month, they pretty much came out and said that they were freezing withdrawals and also any type of transfers as well as trading on their platform was completely frozen. And this was really because of the bearish volatility that we have seen within the crypto markets, but more specifically, they had exposure to a lot of riskier DeFi projects, specifically with the Terra Luna debacle that happened within May. They had a lot of exposure towards that, and that's honestly what kind of put them in a bad position where they didn't have enough liquidity to be able to satisfy all of the withdrawal requests from many different people. Now, for those of you that may not know what Celsius is, they're a crypto centralized platform that pretty much gives people the ability to borrow and lend their crypto assets. So they're really in the CeFi space, which I think CeFi is a better way of saying it because they're centralized exchanges. DeFi is decentralized finance protocols, but a lot of these platforms, when you think about Celsius, you think about BlockFi, Voyager, whichever your main exchange that you may have heard of a lot of, those are centralized exchanges. So you got to also keep that in mind and understand that when we have situations like what happened with Celsius where they had more exposure into a risky DeFi protocol, in a risky, I should say, CeFi protocol, it put them in a position where, they didn't have enough liquidity to satisfy people that were trying to make those withdrawals. Now, when I mentioned about the Terra Luna ecosystem, essentially what happened was Terra, their algorithmic stablecoin, they pretty much were promising a 20% yield with their Anchor protocol. And this was a red flag from the very beginning. When I see that there's a platform that's offering that high of a yield, usually if it's too good to be true, that really means that it is. So, I was kind of hesitant on even wanting to look into that protocol. But, Celsius was holding assets on Anchor. And they also had exposure to UST, which is Terra. And due to the funding issues that they had, they really just didn't have enough equity on their balance sheet to be able to provide the liquidity for the withdrawal request. Therefore, they had to completely halt trading and withdrawals as well as transfers. And that really is something eye-opening of why self-custody is so important. Now, when I say self-custody, I'm saying taking your asset, whether it's Bitcoin or any of these altcoins, you're taking it off of a public network, a centralized exchange, and you're holding it privately on your private keys. And you have anything like Ledger, Trezor, or just some of the few. And if you all are interested in wanting to utilize Ledger with securing your crypto assets offline, I'll put my information here in the show notes with the affiliate link. You'll be able to get a discount on your first hardware wallet. But that's what I mean when I talk about self-custody. It's removing the control from the centralized exchange that they have on your asset, and you're taking more control into your own hands. So with these centralized exchanges, they're essentially, they own your money, they own your privacy, and also your security. Now, when you're utilizing Coinbase, Voyager, Binance, ultimately they have the full discretion of putting a halt to any of your assets, as we've seen with Celsius. Also, Voyager came out more recently, which I'll explain towards the end of this video, of the reason why they did it. Voyager pretty much has created a halt as well, where they said that pretty much people that are making withdrawals on their platform, they can only take out $10,000 per day. So I thought that was eye-opening, that they have pretty much came out and said that if it's anything more than that, we're not allowing you to take that off our platform. And I think that when you think about the purpose of Bitcoin, it really highlights that the network is designed for you to be self-sovereign, where you own your assets, you can go anywhere, it's borderless, it's a separation of money and state, and you have permissionless money. And when I say permissionless, I'm essentially saying that you can participate in the open source technology that gives everyone the ability to participate in this consensus, this proof of work consensus, where everyone can contribute. You have the flexibility of taking your assets off, and you can have the ultimate privacy and security, as well as the decentralization when it comes to holding your Bitcoin. And it just provides a trustless form of money, where you don't have to rely on a Celsius or a BlockFi to tell you what you can do with your money. You can travel to different places with your money simply on a hardware wallet. You can be able to just simply take this anywhere in the world, and you can be able to exchange value with transactions, moving money off of the blockchain, being able to pay for different goods and services. So I think that permissionlessness is so important, and it really highlights the value of why Bitcoin was developed. And another thing that you also have to keep in mind is that you want to have the ownership of your private keys, because when you have it tied to a public network, when these situations happen, when these companies go through financial issues, they having liquidity problems, it really puts you at that counterparty risk, where you're relying on this exchange that you hope that they'll allow you to be able to make a withdrawal, but you could wake up one day and all of the assets that you have on these platforms can be completely eliminated. So I think that that's a strong reason for why you should have self-custody. And then just the last thing that I want to highlight is, the Celsius freezes could also possibly migrate to other centralized exchanges doing the same thing. I'll explain why. More recently, in the last week, BlockFi as well as Voyager Digital, they had to secure credit funding from FTX and Alameda Research, which these two companies are owned by Sam Bankman-Fried. He's the CEO for these companies, and he pretty much announced last week that he was going to extend credit facilities to these crypto platforms, and that the main reason for it was because they're going through liquidity issues because of all of the market volatility. They're heavily involved with different centralized finance protocols, and it's putting them in a tough position where when we have this downward turn that we have been seeing within the crypto market, if they don't have enough money as far as capital, they don't have enough liquidity, they don't have enough assets, when you think about their balance sheets, it puts them in a tough position. And more specifically with the credit funding, I know that FTX is going to be providing $250 million as a revolving credit to BlockFi to help them with raising capital, as well as navigating through the market challenges of what they're seeing right now. Voyager is also getting a loan of $200 million cash in the form of a stable coin with USDC, which is backed by is pegged by the US dollar. And they're also going to be providing a Bitcoin credit facility to Voyager as well. And Voyager basically came out and said that, this is going to help them with safeguarding the assets that they have on their platform, and that's how they plan to use both lines of the credit. So that really just shows me that it is a tough time for them right now. And it's I think all of the contagion that we're seeing with the liquidity issues with Celsius, BlockFi, Voyager, it highlights the importance of self-custody, specifically with Bitcoin, because it is the most secure, it's the most decentralized. When you start going into these other protocols, the trade-off is you have less security, less decentralization. Now, with other protocols, there may be more scalability. You may be able to send a transaction much faster, but I think that the properties of Bitcoin are the most valuable when you look across the entire ecosystem. And I think that it's going to be the standard when it comes to just the crypto market. And I definitely think that it's good to see, that FTX is coming out. They're trying to find a way to kind of keep these companies afloat, but you can really see the counterparty risk involved when you do allow an exchange to put your crypto assets. When you decide to put your assets on their platforms, you're giving up your security, your privacy, and there's a lot of counterparty risk with that. So to prevent this risk, I highly say, having your own private keys, have them in cold storage where it's stored offline off of a centralized exchange. And you want to understand that privacy, security, and decentralization are some of the strong properties of why Bitcoin was developed. So I thank you all for watching this video. Continue to like, subscribe, and share this video. Don't forget to hit that notification bell at the bottom of the screen so you can be notified every week when I drop content. And thank you all for watching and listening, and take care.